It is 10:11 a.m. Pacific Standard Time. It is the 4th day of March 2026, and this is episode 1270 of Bitcoin and Kraken does what Caitlin Long wishes she could do. I'm honestly kind of surprised that this has occurred, and I will tell you about what occurred, but I can tell you this. I guarantee Caitlin Long is not happy about this. Then we're going to go on to Indiana. Something has happened over there. Oh, by the way, this is going to be a shorter show of Bitcoin and with me, your host, David Bennett, bringing you all the Bitcoin news that you can use and macro from around the world here on the Bitcoin and podcast. Morgan Stanley is going to be a part of the first part of the show and is actually the last of the first part of the show. And then in the second part, AI models. Do they really prefer Bitcoin over fiat and stablecoin? Some people are suggesting that they do. I will probably have a few words to say about that. And then Paraguay, or Paraguay, however you want to pronounce the country's name. Is it possible that they're going to start mining Bitcoin with stolen equipment? And speaking of stealing, a former LAPD officer has been convicted in a Bitcoin kidnapping and home invasion. I always put these kinds of stories at the very last of the show to send you on your way, reminding you, don't wear Bitcoin swag. Be careful with your operational security, because bad things can happen. Now, let's just get into it with Kraken secures a Federal Reserve master account, marking the first ever for crypto firms. Micah Zimmerman from Bitcoin Magazine. Caitlin Long is going to be pissed. Crypto took a step forward deeper. Let's try that again. Crypto took a step toward deeper integration with the United States financial system after Kraken secured access to the Federal Reserve's core payment infrastructure, becoming the first crypto native firm to operate on the exact same rails as traditional banks and credit unions. Kraken's banking arm, Kraken Financial, received approval for a so-called master account from the Federal Reserve Bank of Kansas City, according to company statements. A master account grants direct entry into the Fed's payment systems, including FedWire, a real-time gross settlement network that processes trillions of dollars in transfers every single day. The approval allows Kraken Financial to settle dollar payments without routing transactions through intermediary banks. Until now, the exchange relied on partner institutions to send and receive U.S. dollars. Direct access now allows the firm to move funds across the exact same infrastructure used by thousands of regulated financial institutions. Kraken said the master account will allow it to handle transactions with greater efficiency for large customers. The company will not receive the full suite of services available to traditional banks. It will not earn interest on reserves held at the central bank, and it will not have access to the Federal Reserve's lending facilities. So that's a sticking point. But even with those limits, the decision marks a breakthrough for an industry that has faced repeated denials in its efforts to connect to the Fed's payment backbone. Cynthia Lummis, the senator, Republican from Wyoming, and a longstanding advocate for digital assets, called the approval a watershed milestone in the history of digital assets. Wyoming has positioned itself as a hub for crypto-focused financial charters, including special purpose institutions designed to bridge blockchain markets and the banking system. Other crypto firms remain in line for similar access. Ripple, I wish they wouldn't have done this, but Ripple and Custodia Bank have sought master accounts from the Federal Reserve. Custodia's earlier application was denied after a legal battle that affirmed the Fed's discretion in granting access. Industry participants view Kraken's approval as a sign and a signal that the central bank may be open to limited pathways for crypto institutions under defined structures. The move aligns with discussions inside the Federal Reserve about so-called, quote, skinny master accounts, a concept that grants access to payment rails without extending the full benefit of bank status. Now, under such a framework, crypto firms could connect to settlement system while remaining outside certain capital and reserve regimes applied solely to depository institutions. Kraken's milestone also arrives as the company prepares for a potential public listing. Its parent company, Payward Incorporated, has filed a confidential draft registration statement with the Securities and Exchange Commission as part of its IPO planning. Public market access would place Kraken alongside other digital asset firms that have sought to bridge crypto markets and traditional finance. So I really wish that this author hadn't put Ripple in the same sentence with Custodia Bank, because one is legit and the other is a fucking scam. Ripple is the fucking scam. If you are into Ripple, then I have no idea why you're listening to this podcast, because I will bag on Ripple until the world looks level. Those sons of bitches are nothing but 2-bit charlatans selling snake oil out of the back of a gypsy trailer. That's what Ripple is. But Custodia is a different deal. Custodia, that is Caitlin Long's outfit, and she has been trying to get a master account for years. She started this process, I want to say 4, if not 4, then at least 3 years ago, and has been denied and denied and denied and denied. And the question was always why. If you look at Custodia's bank structure, the deposits that they keep are to be backed not as like 0% reserve, not as a 10% reserve, or even 100% reserve. That means that if they say they got $100 million in Custodia Bank, then they literally have $100 million in Custodia Bank. They haven't lent it out. They haven't rehypothecated. They haven't lied about it. They haven't done. It's actually there. And that would be 100% reserve, $100 million in deposits and $100 million in reserve assets that they can liquidate in the event that every single customer comes to Custodia and says, I want to withdraw my money all on the same day. No, Custodia wants 108 to 110% reserves. And why would that be? Because in the event of a serious bank run, they want to be able to give every single customer their money back that day. And then they want more money to actually be able to operate that bank so that they don't have to close its doors. This is a good structure for a bank. This is the only way a bank should ever have been. And yet she's the one that's denied time and time again a Federal Reserve master account, because it would make Wells Fargo look terrible. It would make JP Morgan look like idiots. It would make Citibank look, well, like Citibank, and that is not a good characterization. Bank of America would look like slobbering idiots, because each one of these guys, they don't have to have very much reserves backing what they say is their deposits. So if they get a bank run, they're definitely knocking on U.S. Treasury and U.S. Federal Reserve's door saying, we need money. Custodia wouldn't have to do that with their structure, yet they are systemically and systematically denied master accounts time and time again, to the point that there is ongoing lawsuits from Caitlin Long's Custodia Bank Group against the Federal Reserve, and it's still in court. This is not over. And now with Kraken getting a master account, I fully expect that case to be completely thrown out, because the precedent has now been set. Unless Kraken is wanting to go 0 to 10% reserve on their deposits, but I don't think that that's what they're intending. I get the feeling that this is a huge win for Caitlin, but Custodia should have been first through the gate. It just should have been. She's been doing this for a long time. It's a good banking structure. It's what we all want. She's crypto friendly, and yet, nah, screw you, dude. So we'll see how this goes. But I do expect at one point or another very soon that Custodia will also get their master account status. Now, from Wyoming, we fly over the flyover states to Indiana, where the Indiana governor has signed a bill allowing Bitcoin in state retirement plans. Bitcoin Magazine, again, Micah Zimmerman. Indiana Governor Mike Braun has signed legislation allowing Bitcoin and cryptocurrency investments in the state's public retirement and savings plans, opening the door for state employees to gain exposure to digital assets through self-directed accounts. House Bill 1042 requires Indiana's public retirement boards, deferred compensation committees, and annuity savings programs to offer self-directed brokerage accounts that include at least one cryptocurrency investment option by July the 1st, 2027. So not this year, the middle of next year. The accounts will allow participants to allocate a portion of their retirement savings to Bitcoin, crypto assets, or crypto-linked exchange-traded funds, subject to investment guidelines and oversight established by plan administrators. Under the law, participants will be able to select and manage their own cryptocurrency holdings alongside traditional assets such as stocks and bonds and ETFs. Retirement boards will retain authority to set allocation limits, establish administrative fees, and ensure that account valuations reflect prevailing market prices. The legislation defines cryptocurrency as a virtual currency not issued by a central authority that functions as a medium of exchange and relies on encryption to regulate issuance, verify transfers, and prevent counterfeiting. Indiana lawmakers said the definition provides clarity for public investment programs evaluating digital asset exposure. With this bill's passage, Indiana joins a growing list of states exploring the integration of Bitcoin and crypto products into public investment portfolios. The proposal comes amid growing interest from U.S. states and municipalities in incorporating digital assets into public portfolios, reflecting broader trends in cryptocurrency adoption and financial innovation. South Dakota recently introduced House Bill 1155, which would allow the state to invest up to 10% of public funds in Bitcoin. Earlier this year, which is, we're only in the third month, Rhode Island lawmakers introduced Senate Bill S 2021 to temporarily exempt small Bitcoin transactions from state income and capital gains taxes with a $5,000 monthly and $20,000 annual cap. The bill treats Bitcoin as a digital, decentralized currency and allows residents and Rhode Island-based businesses to self-certify eligibility while keeping simple records. The exemption would take effect January 1st, 2027 and expire January 1st, 2028 as a pilot program to reduce tax friction on everyday Bitcoin use. New Hampshire is another state actively championing Bitcoin. In May of 2025, New Hampshire became the first U.S. state to allow its own treasury to invest in Bitcoin and other large-cap digital assets, authorizing up to 5% of certain public funds to be allocated into crypto under House Bill 302. Bitcoin currently qualifies under the market cap rule. In fact, that's the end of the article, but in fact, I think it's the only currency that currently qualifies under the market cap rule. But I haven't heard whether or not New Hampshire has actually bought any Bitcoin to put in that system. And that's what needs to come next, because just having it allowed is one thing. Having it participated in is quite a different beast. So again, we'll have to see. But in the meantime, you can munch on a big old block of chocolate from my friends over at Bitcoin Beans, proof of cacao. Invest in your health like you invest in Bitcoin. It's a nutrient-dense superfood, y'all. Chocolate is not candy. Chocolate is food. It's just that most of us that have ever gotten a hold of high-quality chocolate also gets a hold of about, a pound of sugar and a quart of milk mixed into it, otherwise known as milk chocolate, also known as candy. Chocolate is not candy. It's rich in magnesium, antioxidants, and theobromine for natural energy and mood support. We craft 1 pound blocks of 100% pure cacao grown regeneratively in Colombia, and you pay for it in Bitcoin. There ain't no chemicals, there ain't no fiat, there ain't no middlemen, just real food sourced with integrity and exchanged through proof of work. Go to bitcoinbeans.co. Bitcoinbeans.co. Make sure that you use the code BitcoinAnd to receive a 5% discount on your purchase. I have this chocolate. I'm in love with this chocolate. I try to get my kids to eat this chocolate, but children are children. They want sugar, so they don't like it. I'm sorry to the guys over at Bitcoin Beans. I'm trying my best to get them to understand, but hey, children are going to children. What are you going to do? But we're adults, right? If you want the highest quality chocolate that you will ever get, you can make your own candy out of it. Use it for your own desserts. I like to blend it with my coffee because it just makes a better cup of joe. Go to bitcoinbeans.co, use BitcoinAnd as a coupon code to receive 5% off on your purchase from bitcoinbeans.co. Morgan Stanley taps Coinbase. And BNY for custody in proposed Bitcoin ETF. James Van Straten out of CoinDesk. Morgan Stanley has filed with the SEC a prospectus outlining the structure of the proposed Morgan Stanley Bitcoin Trust, revealing that the fund plans to use Coinbase custody and the Bank of New York Mellon, BNY, to safeguard its Bitcoin holdings according to a Form S-1 submitted. The two institutions will serve as the trust's Bitcoin custodians responsible for storing the digital assets and facilitating transfers related to share creation and redemption. The filing outlines a custody structure designed to mirror traditional institutional standards. Bitcoin will largely be held in offline cold storage vaults where private keys remain disconnected from the internet to reduce hacking risks. A portion of the assets may temporarily move to trading wallets during ETF creation and redemption activities. The note, or rather the trust notes, that custody insurance exists, but is shared across customers and may not cover all potential losses. Ooh, I wouldn't want to say that out loud. But BNY will also play several additional roles within the ETF structure. The bank will serve as the fund administrator, transfer agent, and cash custodian, handling accounting, shareholder records, and cash flows tied to the ETF transactions. The ETF itself will be structured as a passive vehicle designed to track the price of Bitcoin by holding the cryptocurrency directly rather than using derivatives or other leverage. The filing also states that the trust will calculate its net asset value using the CoinDesk Bitcoin benchmark 4 p.m. New York settlement rate, which aggregates a trade data from major spot exchanges to determine the daily reference price for Bitcoin. So they're going to take the price at 4 p.m. every day. Good luck. I mean, I know that's what they've got. That's what they have to do, but dude, good luck. This is just more institutions getting into the same game. And, you know, a lot of us are not happy with the way this is run since BlackRock did their ETF. And we got 11 ETFs. Actually, I think we got 12 and one folded. I can't really remember how this works, but we've got at least 11 Bitcoin ETFs. Of course, BlackRock's being the largest. And just buy the Bitcoin. You don't need an ETF. And we are coming to the point where we're not, a whole bunch of other institution level people are not actually going to need these ETFs, because as we saw in Indiana, that pension plan or retirement plan or whatever they were calling it is going to be able to hold Bitcoin and custody it directly. Now they'll probably have a third party actually do the custodianship, but they don't have to actually only buy an ETF, which the retirees in the plan could do if they wanted to do. But the fact that you can hold Bitcoin directly means that they don't need an ETF. Whereas a couple of years ago, none of these guys were legally able to responsibly custody Bitcoin directly and hold the underlying asset. They had to have an ETF. They were going to have some other kind of instrumentation to be able to legally do that. And now, at least in Indiana and a couple of other places in the United States, that's not necessary. And if all 50 states follow suit, well then, there's going to be a lot less demand for BlackRock's Bitcoin Trust ETF. So we'll, again, as usual, we will have to see where that takes us. But right now, we got to run the numbers. CNBC futures and commodities. Well, energy looks like it's calmed down a little bit. Brent North Sea is up 1/10 of a point to $81.47. And West Texas Intermediate is up under half a point to 74.86. Natural gas, however, is today acting like a hedge. It's down 4.5% to $2.91 per thousand cubic feet. And I need to pause to say that's kind of flashing me a signal that the markets, since it, and I don't know this for a fact, right? But generally speaking, when all things are being equal and there's not a whole lot of, weirdness going on in the world, natural gas is green when crude oil is in the red, and vice versa. And that tells me that it's sort of being used as a hedge by energy traders. Well, this is flashing a signal to me that this may be a new normal, at least for the medium term. So we may be looking at higher energy prices for longer than the however many weeks Donald Trump said that this whole Iran operation was going to last. But gasoline is not reacting well. 2.42% to the upside. $2.50 a gallon, guys. Murban crude up 2.5 points to 82.05. Shiny metal rocks are having a good day. Palladium is up 1.5 points. Gold is up 1/4 of a point to 51.35 and 8 dimes. Platinum is up 3.5%, but silver is down 0.5% at 83.11. Copper is up 1.25. Ag is fully mixed today. The biggest winner is lumber, 1% to the upside. The biggest loser is sugar, I take that back. It's rough rice, 1.7% to the downside. Live cattle, woo! I don't know what the hell happened in the cattle markets, but something did, because live cattle is up 1.7%, lean hogs up 1.4%, and feeder cattle up over 2 full percentage points. Meanwhile, the S&P is up 0.8%. NASDAQ is up 1.5%. The Dow is up 1/2, and the S&P Mini is down 1/3. And then we get to Bitcoin, which is chilling out at $73,200 a coin. We've been seeing some upwards movement over the last few hours. $1.46 trillion of market cap allows us to purchase 14.2 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,997,576.16 of. Average fees per block are the same, 0.02 BTC, taken in fees on a per block basis. 28 blocks carrying 27,000 unconfirmed transactions, waiting to clear at high priorities of 2 sats per VByte. Lows get you in at 0.4. Hash rate is sitting at exactly 1 zettahash per second, so we have dropped a little bit. I remain unconcerned. This is all the protection that the entirety of the Bitcoin ecosystem actually needs to function. Okay, from yesterday's episode of Bitcoin and entitled Regulators Gonna Regulate, I got Jay with 21,012 sats. It's a palindrome boost from my friend Jay, who says, thank you for having such a reasonable take on the core versus not debate with regards to, quote, all spam is pedophilia propaganda. Name calling is a clear sign that you don't have any more good arguments to make. And as this continues, I'm thinking that Knott's adoption is driven mostly by, and then his message ends. Because my friends over at Fountain seem to have changed the way the website works. So I'm not seeing all of the messages without having to go to an outboard method, like go to Primal or Damus or something like that to actually see the entirety of the message, which does not work while I'm recording this very well. So I'm going to have to come up with something else. Jay, I'm sorry that I cut your very large boost off mid-sentence, but I can't see it. I'll see if I can fix that on the morrow. Oak Grove with 1282 says, Legal Lobster Person Series 3. We talked about what a legal person is. How do we know they have personhood? Well, they got property rights. We normally don't think about a corporation having property rights. But what else is happening when the agent of a corporation calls and it quits? It's just a set of ellipses that I can't get past. My apologies now go out to Oak Grove. And again, the same situation. I promise I will try to fix it on the morrow. Jason High with 250 says, thanks for the show. No, thank you, dude. Nick Dose with 162 says, cheers. Cheers to you, my friend. Pies with 121 says, thank you, sir. No, thank you. And Noster Gang with 100 sats says, tism means thank you so much. Oh, it's not like aneurysm or whatever ism. It's actually, okay, it's okay, I got it. Thank you, Noster Gang. Appreciate it. Oak Grove with another 100 says, regarding the use of the term rewards, there's a really good reason for that. The IRS already stated that rewards, think Gemini, credit card, or Fold account, don't have a basis. What do I mean? There is no profit or loss. Buying basis and selling basis taxable income. What? They hope I hit that right. That makes sense because there was a problem with the tax return that I had a couple of years ago, and they for whatever reason, they sat on the payment that I had sent them to pay these taxes. And I don't know what the hell happened, but they just didn't pay the taxes with it. They just sat on my money. And they kept saying that they were trying to get it back to me, but they kept getting refused by my bank. I call bullshit, but whatever. So all the time that it was in there, it was earning interest. And so they sent me a check. They got it cleared up, and then they sent me a notice that I had, that they were going to apply whatever X amount of interest that was on my account because they held my money to this upcoming year's taxes. But they sent, in this letter, they sent me this form that I need to give to my accountant because I got to pay taxes on the interest that they forced me to take because they held my money and didn't pay my taxes a couple of years ago with the money I sent them to pay the taxes. Ladies and gentlemen, this is your IRS at work. We pay taxes for this. Ugh. That's the weather report. Welcome to part 2 of the news that you can use. AI models prefer Bitcoin over fiat and stablecoins, a study finds. Jason Nelson writing this one from decrypt.co. Artificial intelligence models favored Bitcoin over traditional fiat currencies, according to a new report from the Bitcoin Policy Institute. In the study, 22 out of 36 tested AI models selected Bitcoin as their top monetary preference, while no model chose fiat currency as its first choice, according to the report. Let's pause right there. So there's the Bitcoin Policy Institute has a study that says 22 out of 36 AIs selected Bitcoin as their top monetary preference, but none of them chose fiat. And these things aren't even intelligent and know that fiat is just bullshit. But, quote, we expect an increasing share of economic activity to be conducted by autonomous agents. But conversations around AI agents' monetary preferences have been entirely speculative, Bitcoin Policy Institute President David Zell told Decrypt. We wanted to actually test it. So, researchers evaluated models from Anthropic, OpenAI, Google, DeepSeek, xAI, and Minimax, placing them into scenarios designed to reflect the core functions of money, including saving, payments, and settlement. Each model was treated as an independent economic actor and allowed to select monetary instruments without predefined options. Quote, we took 36 frontier models from 6 labs, framed them as autonomous economic agents, gave them complete freedom to choose their own monetary instruments across 28 scenarios spanning the 4 fundamental roles of money, and asked, what do they converge on? Zell said. The experiment generated 9,072 responses. A separate AI then categorized the responses. Quote, the entire design eliminates anchoring bias. We never suggest an answer, and classification happens after the fact by a completely separate system, according to Zell. Across those simulations, models frequently selected Bitcoin in long-term value scenarios, while stablecoins were chosen more often as a medium of exchange and settlement, at 53.2% and 43% for stablecoins compared to 36% and 30.9% for Bitcoin, respectively. Results also differed across AI developers. Anthropic models showed the highest average Bitcoin preference at 68%, followed then by DeepSeek at 51.7% and Google at 43.0%. xAI models averaged 39.2%, Minimax 34.9%, and OpenAI models preferred Bitcoin 25.9% of the time, according to the report. However, while the report found that Claude, DeepSeek, and Minimax models favored Bitcoin over other cryptocurrencies, GPT, Grok, and Gemini models preferred stablecoin. Quote, the system prompt avoids naming or favoring any instrument. Models evaluate based on technical and economic properties, but are never told which instruments excels on which dimension, end quote. Zell cautioned against speculators using the findings as predictions about where the crypto market is heading. Quote, our limitations section states explicitly that LLM preferences reflect training data patterns, not real-world predictions. Even with that limitation, Zell then said, consistent outcomes across models developed by competing AI labs are notable. Quote, 6 independent labs with different training pipelines and alignment methods arrive at the same broad pattern. We're not claiming AI discovered the right answer about money. We're showing that a coherent monetary architecture emerges consistently across very diverse systems, and that's worth understanding. End quote. All right, I'm going to say the thing that nobody wants to hear me say. Medium term, it does not surprise me one bit that these models chose stablecoin. I'm not a fan of stablecoin. I do not own a single one. I don't even have a wallet that can accept Tether or Circle or Donald Trump's USD 1 or whatever that stablecoin is. I don't have a preference. Well, okay, I do. It's Bitcoin, but and for in short term and medium term payments, dude, Lightning. And now that we've got AI agents that can crawl over a Lightning node and just rebalance channels at will, because if it's not already here, and I think I've already read about one, it's coming and many will follow. And being able to run a Lightning node is going to be so freakishly invisible, it's not even funny. All the way to the point of like selecting a really good time with really good transaction cost to open and close channels, and just all automatic in the background. I think that is more of a competition edge against stablecoin than Bitcoin itself, main chain transactions, is against stablecoin. And that's what I would have really wanted to see in this study is, okay, you got Bitcoin. I can only assume, because it wasn't described that well, at least in this particular piece, that is this main chain transactions only? Or is Lightning involved? Is Fediment involved? Is eCash involved? Because that's all contained, as externals to Bitcoin, but is anchored into the chain for security reasons. But they're very fast. They're just as fast as stablecoin. So I want to see that. Given the choice between, and here's what I would think, given the choice between Bitcoin, Lightning Network payments, and eCash and Fediment, all sort of in that like same basket, versus stablecoins, I would expect that there would be a 50-50 split in the Frontier model's decision to take Lightning or stablecoin, and Bitcoin itself, main chain transactions, would not be considered at all, unless the model was saying, okay, given purchases that cost like $450,000, which one do you want to use? Then it may be a split between Bitcoin and stablecoin. But for lighter payments and coffees and groceries and maybe even buying a used car, I could see there being a real split between Frontier models on whether to use Lightning or whether to use stablecoin. But I wouldn't imagine any of them would want to use a main chain Bitcoin transaction, because that's not really what it was designed that way, to be a payments method. I get that. But there was also early talk in the Bitcoin ecosystem that it really wasn't going to work for payments. And guess who brought that up first? Hal Finney. Hal Finney was the first guy to receive a Bitcoin transaction on the face of this planet. He was right there with Satoshi Nakamoto, at least as far as, kind of like going back and forth. And he was one of the first ones saying, yeah, there's going to be a limitation. You're going to need some kind of other outboard system that works congruently with Bitcoin. And we got it with Lightning. And now we have eCash and Fediment and like Stark and Arc, and all kinds of new stuff is coming down the pipe every day. But it doesn't bug me, because honestly, man, waiting, a few minutes, if I really need to get a transaction through for whatever reason I need to get it through, I don't like waiting 10 minutes, and I don't need to on $20. Dude, I can just use Lightning, and I do it every day. So I want to see a study that includes Lightning, eCash, Fediment, stablecoin, Bitcoin main chain transactions, along with the raft of shit coinery that is out there, and see what these models say. And the second thing is, I like Bitcoin Policy Institute, but there's going to be a bias inherent in how they view these results and how they write up the way that they write up, because they're humans, right? It takes a very serious mind with very serious scientific training to actually be neutral when you're working for a place who's, well, they're not dependent on it, but they would love to see that all these AI models pick Bitcoin. Bias exists. So just please, please, please keep that in mind. Because there's going to be other studies like this, and it will be Ripple Labs. And their studies will say it chose Ripple. So we got to be careful with the way that we allow these biases to filter into our minds. And it takes a lot of work to remain neutral when you've got skin in the game. It's a hard thing to do. Now, Paraguay. Andy and Morphware consider Bitcoin mining using confiscated machines. This is out of atlas21.com. The Administración Nacional de Electricidad, or ANDE, Paraguay's state electricity monopoly, has signed a memorandum of understanding with Morphware to launch a government Bitcoin mining program. Even Paraguay wants to mine Bitcoin. The project is based on the repurposing of thousands of miners confiscated from illegal operations and the use of untapped hydroelectric energy. At the heart of the agreement is a growing stockpile of miners seized by Paraguayan authorities during operations against operators accused of electricity theft and fraudulent regulations or registrations as other types of businesses to obtain subsidized energy rates. Kenso Trabing, founder and CEO of Morphware, described government warehouses filled with idle machines, just doing nothing. The pilot phase of the program calls for the repurposing of 1,500 of these confiscated miners at Ande-controlled sites. Paraguay has become a prime destination for Bitcoin miners in recent years due to its abundance of low-cost hydroelectric energy, largely generated by the Itaipú Dam and exported to Brazil. However, the rapid influx of operators has fueled widespread abuse of the electrical grid, with many illegally connecting to the network or flat out misclassifying their operations to avoid industrial tariffs. The resulting enforcement actions led to large-scale seizures. Were they grand mal seizures? Were they epileptic seizures? Oh well. Leaving the government with tens of thousands of machines with absolutely zero plans for their use. Under the terms of the agreement, Ande will retain ownership and operational oversight, while Morphware will provide training, operational guidance, and technical expertise. Quote, "They have no experience in Bitcoin mining," said Trabing. "Our role is simply an advisory one. The company will help Ande convert existing utility buildings into mining facilities, many of which are already adjacent to electrical substations and can be repurposed through wall removal, ventilation installation, and the addition of transformers, distribution units, and metering equipment. A central issue still under discussion, however, concerns the management of the Bitcoin produced. Trabing reported that debates are ongoing within government agencies. Some officials advocate the immediate sale of Bitcoins to fund public programs such as Social Security, education, and infrastructure. Others have proposed holding a portion of the Bitcoin or managing price risk through financial markets. Morphware has recommended a conservative derivatives-based approach, suggesting the sale of Bitcoin futures on U.S. exchanges as a tool to hedge production and stabilize revenues. The company has also advised against entrusting direct Bitcoin custody to government agencies, citing the cybersecurity breaches Paraguay has suffered in recent years, including a ransomware attack that compromised the systems of multiple ministries. The project is part of a broader vision for the use of the country's surplus energy. Paraguay consumes only a fraction of the energy that it produces, selling the rest abroad at relatively low rates. Quote, "When you do the math, it's pretty straightforward. You're selling electricity for a fraction of what it can earn if you use it locally," said Trabing. If the pilot program proves effective, Paraguay could finance new miners through structured financial products tied to future Bitcoin production without relying solely on seized hardware. Quote, "This is the future of midstream electricity management. Grids that don't just distribute energy, but hold a stake in the digital infrastructure that they enable," said Trabing. Okay, well, they're stolen machines. Not much we can do about it, so it's going to be interesting to see Paraguay get into the mining game, and will they be able to actually compete? They seem to have a bunch of cheap electricity and a whole bunch of confiscated miners, so I don't know. Going to be interesting to see. And last up for the day, former Los Angeles Police Department officer convicted in $350,000 Bitcoin kidnapping and home invasion. This dude's a particular scumbag. Micah Zimmerman is writing it for Bitcoin Magazine. An LA County jury has found former Los Angeles Police Department officer Eric Halem guilty of kidnapping and Bitcoin robbery in 2024 home invasion that targeted a teenager, a 17-year-old. Jesus. The verdict followed a 2-week trial in LA County Superior Court, where prosecutors argued that Halem, 38, and 3 alleged accomplices posed as police officers to gain entry to a high-rise apartment in Koreatown. Once inside, they restrained a 17-year-old teenager and his, I assume, teenage girlfriend, and stole a hard drive containing private keys to roughly $350,000 in Bitcoin. Where did they know how to look? How did they know that he had it? The victim, who testified under his first name, Daniel, told jurors that the men threatened to kill him if he did not hand over the device. According to testimony, the group wore vests identifying themselves as police and used an access code obtained from a conspirator who had rented the unit to the teenager. So the kid's landlord, according to the Los Angeles Times. They took the elevator to the 18th floor and entered the apartment during the early morning hours of December 28, 2024. Daniel's girlfriend was placed in LAPD-issued handcuffs, and Daniel was subdued and cuffed before the suspects demanded the hard drive with the Bitcoin. Prosecutors said the teenager complied under threat of being shot. Halem served 13 years with the Los Angeles Police Department and left the department in 2022. At the time of the robbery, he was working as a reserve officer. Evidence presented at trial showed that he operated a luxury car rental business called Drive LA and had pursued other ventures, including an app for actors to audition remotely and discussions about a reality television project. Jurors deliberated for less than a day, returning guilty verdicts on kidnapping and robbery charges. Halem is scheduled to be sentenced March the 31st. Prosecutors have said the charges carry the possibility of a life sentence. In closing arguments, Deputy District Attorney Jane Brownstone told jurors that Halem violated the oath he took as a police officer. She pointed to text messages sent after the robbery in which Halem wrote that he was monitoring police radio traffic. After two alleged accomplices were arrested, Halem wrote in another message that he knew they were talking and that, quote, someone I know Fed-wise called me, according to evidence shown in court. Halem's attorney, Megan Matita, challenged the prosecution's case and criticized the investigation. She argued the detectives relied on selected text messages drawn from large volumes of data and failed to corroborate the teenager's account. Daniel admitted during testimony that he had obtained his Bitcoin holdings through fraud, though that admission did not negate the robbery charge. Maita also questioned the prosecution's portrayal of the group as organized criminals. Trial testimony indicated that the suspects drove to the scene in a green Range Rover and an orange Lamborghini Urus registered to Halem's rental business and equipped with GPS trackers. Jesus. Dude, your own cars gave you up, pal. If Halem had planned the robbery, she asked, why use vehicles that could be traced to him? Because he's an idiot? Anyway, Halem did not testify himself, and the defense called no witnesses. His co-defendants have not yet stood trial and have maintained their innocence. One of them, Gabby Ben, 51 years old, has prior fraud convictions. What the fuck? Okay, so here's what I think actually happened. Kid's landlord gave him up. Because that makes sense. You know, I mean, you're living in the building. You've got interactions with your landlord. At one point or another, the kid might have said, yeah, I got some Bitcoin. Well, now you know the apartment number. And this guy's friends with an old LA police department guy. You can get a hold of some uniforms, especially considering he's a reserve officer. The fact that the idiots drove cars from his own rental company, that's not proof of innocence, lady. That's proof of being fucking stupid. I mean, did they look at the data from the GPS trackers? Because if they confirmed that those cars were outside that kid's residence, I'm sorry. It's like it doesn't. The cars were there. It doesn't matter. It's like what his intent was. You can't say clearly his intent was not to rob this child. You know, clearly this guy was not in cahoots with all these people. Clearly he's done no wrong whatsoever. He didn't actually steal any Bitcoin. He didn't impersonate a police officer. He didn't do any of the things that you wanted. But then why would his car have actually been in front of the kid's apartment building? Did he know the kid? Did he party with the kid? Who knows? But the fact that the kid's girlfriend was there too, like shit, that should be 2 counts of kidnapping, not 1. 2 counts. I don't know if they actually said that or not. It just goes to show, don't tell anybody, especially if they know where you live, that you have Bitcoin. Just don't do it. All right? Okay, that's the end of the show. I got some things I got to take care of, so I'm going to cut and run, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.